My name's Andy Johnston, Chief Executive of a company called Local Energy. To give you a bit of background around that, my main job is as a director of something called the Local Government Information Unit. We're a membership organisation for local authorities. We do all sorts of stuff, children's services, commissioning, you name it, whatever local government is interested in, we get involved in. I tend to lead on the sustainability stuff. A few years ago, we got very much into the whole climate change agenda, and we decided there was so much activity within there that we should set up a company to actually manage that work. And so that's what Local Energy is. Importantly, it's a social enterprise. It's not for profit. Its primary function is around helping local government deliver their aims and ambitions. And of course, as we've already discussed, there's a big local government agenda within Green Deal. It's a shame there's nobody from local government here today, but it's quite nice, actually, a change for me not to have a local government audience, and I can think about different people's requirements. As part of what the process that we got involved in with all sorts of things, we try to get as practical as possible so we can transfer the learning across. So when the carbon reduction commitment was around, we started a trading platform. When the Green Deal came along, we thought the best way we could learn about that was actually to become one of the key players in that, and we decided we would become a provider, and we're going through the process of that whole provider registration now. I'll say a little bit more about that, but as things have gone on, we've begun to realise actually there's more than we could actually do. Having become a provider, there's a real role for us in here, and in terms of Peter's presentation, I think I'd characterise us as hands-off in terms of the model, but I would also say sort of hands-off ethical would be our main model. So we're seeing it very much from the finance side coming through, how do you deliver this locally, but we don't have expertise in actually installation or anything like that. We'd be looking to work with others, and if you think about what the public sector agenda would be around that, it would be around local economic development, it would be around SMEs, all that sort of thing. So it matches very nicely to what the other things we've been talking about. So in terms of where we've got to with becoming a Green Deal provider, it's a funny process, because obviously you're having to prove that you can do something which has never ever been done before by anybody. A Green Deal provider does not exist, but you somehow have to convince the oversight and regulatory body that you could do it. So the questionnaire is all about what will you do, how will you do it, etc. So it's been an interesting process for us. You start off with what they call just an initial assessment, which is basically, have you got a consumer credit license? Are you a limited company? And you know, that sort of thing. Are you no board members being convicted? All that sort of stuff you have to be sure about. And then you move into what was, during the times of the Olympics, a topically named fitness test that you work through, which this is where you start telling government this is what we intend to do. It's a strange process in so much as the form itself that you initially fill out is very short and concise, presumably to please the ministers, that this is a low bureaucracy scheme. But then after that, you get lots and lots of supplementary questions about what exactly did you mean by that? You say you've got a training process, please send us all of your training process to prove that you have, all that sort of stuff. So we've been working through that, and we've been in what they call the final stages for about a fortnight now. And we're not quite sure why we haven't progressed from those final stages. We can't get a response. This is partly because the body running all of this are also doing it for the first time, and they don't know what a good Green Deal provider actually looks like. But it's also partly to do with the fact that actually quite a lot of organisations have decided they want to be providers, far more than the government was expecting. The last number I had, which was back in October, was about 120 organisations have applied to be providers. I'm sure that number has been going up in the intervening period. So that's lots of organisations, and I've just checked on their website, only 14 have made it through so far. There are only 14 Green Deal providers actually out there. But it's worth keeping an eye on that website, because that website has registers of assessors, providers, and more pertinent to this discussion, I suppose, installers as well. I just looked up the Lincoln postcode. There are 4 registered Green Deal installers with an LN postcode. I don't know if any of them are you. Judging by the looks on your faces, no. Sorry? NG. There was 2 more which had an NG postcode. And then it became S, which is probably Sheffield, is it? Yeah. Okay, so in terms of timing, we're very much at the beginning of this process, and it's not too late to become installers, but you do need to actually go through the process of filling out the forms and becoming a Green Deal installer with the quality mark. As a provider, when we get our registration, we cannot contract with anybody else if it's a Green Deal plan. If it's money going through the meter, then we have to work with a certified Green Deal assessor, and we can't work with anyone else on that. So some of the things that they've been asking for, they want to know what our model of a Green Deal plan would actually look like. What do we present to the property owner, which was an interesting exercise to go through because we're on the ethical side of this. We try to be as transparent as possible, and you present a document which you think, blimey, I don't think I'd take that up. When you start pulling out, this is the interest rate you're going to pay, this is the cut that's going here, etc., etc. So there's some interesting questions about the extent to which all providers will be transparent in the plans that they hand out. The one thing that they've really stressed is training, and it goes back to this whole point that no one's done this before, so they need to be confident that your staff really understand the Green Deal in all its glorious complexity that we've been talking about this morning, and you have training in place to make sure that they do actually know it. There are no qualifications. You can't become a Green Deal provider, a certified Green Deal provider going on a training course or anything like that. We have to prove organisationally that we're on top of this and we can make it work. And what they're really interested in is, do we understand the Green Deal framework and the rules and regulations within that, and also the secondary legislation that supported it, so you've got to get your head around a regulatory document as well. And then lots of legislation, to be fair, but the 2 main bits are the Data Protection Act and the Consumer Credit Act. Sorry, that should be CCA. We've got a consumer credit licence, and they want to know that we've got training in place where every time I take on someone new working on Green Deal, I can sit them down, spend time with them explaining all of this legislation so that they know what to do with customer information when they get it, they understand all the lovely wrinkles within the Green Deal, and they're also on top of consumer credit so that they're protecting consumers from some of the behaviours that we've already flagged up that could go wrong. What's important, I suppose what's interesting, is do you actually know what kit to put where and when is not part of the requirement for a provider. You don't have to know any of that. The relationship between the 3 registered groupings, installer, provider and assessors, is quite hard to understand how that will work, because if you're an assessor, you need to go on a training course to become an assessor, and then you pass through that, etc. That training course is all about the technical side, nothing to do with your relationship with the other people in the grouping. If you're a provider, I've explained that it's all about, mainly about this lot, understanding the legislation and the consumer credit side. And if you're on the installer side, then it's not, there's no training involved. It's about your PAS 2030 and the rest of it, and then going through a few hoops to get that signed up. And in that, there's no understanding of the relationship between you and providers and you and assessors. And it's where those gaps come, which I think is quite interesting. It does allow for lots of creativity. So Russell has explained a model which has sort of flipped the conventional model on its head, where everyone assumed it was linear, the money would come to the provider who would then commission SMEs. You can turn it the other way around if you want to, and it's one of the beauties of the scheme is that flexibility, but it's also potentially one of the great risks. And then the final point down the bottom here is, if you thought what Peter explained was complicated, there's a whole other load of stuff that sits behind Green Deal, which is just as complicated. How does the money get from the consumer back to the provider is ridiculously complex, and that's my understanding of one of the major delays of implementation of the scheme. It's mainly to do with the fact that the way that we're billed for energy is so arcane and archaic and primitive and diverse that the idea that you could somehow pull all that together around one scheme, the Green Deal, and payments would make their way beautifully from a meter reading through the electricity company and then back to the provider has actually proved extremely complicated to do, and has required a lot of investment by the utility companies. But that obviously, that doesn't bother me. I don't care as a provider, as long as I get the money back. But you do have to pay lots of little hidden fees and charges. You have to sign up to databases and pay small commissions on every time that payment makes its way back to you, all that sort of thing. So again, as Russell pointed out, there's a whole little extra bit of fees in there which is yet to be bottomed out in terms of its cost, which the property owner will be paying ultimately. So that's us becoming a provider. What I want to talk about in the rest of the session is more about the work that we've been doing with consortia of local authorities around the country, and the ways of delivering Green Deal that we've been developing, some of the models that we've come up with, some of the models that already exist. So this is what DEC has got on its website as the options available for local authorities getting involved in the Green Deal. Do nothing, it's not compulsory, they don't have to do anything around the Green Deal. Greg Parker would be disappointed, but he can't make local authorities get involved. There's the promoter model, where the local authority goes out with leaflets saying this is a jolly good thing, please take it up. There's the producer model, where they're far more active in the process, and the local authority is engaged in producing leads for providers to follow up. And that's part of Russell's model, is having local authorities help produce the work here, because they're their trusted brand. There's the provider model, the local authority itself becoming a provider. There was some enthusiasm around this. My understanding is it's waned considerably once they've realised the liabilities that they're signing up for and the amount of work that's involved and how different it is to being a council. I think that's a key point. Local authorities are not currently being encouraged to take on new, innovative ways of working. It's quite the opposite. And then there's what is currently what you would say the dominant model, the single private provider, where a local authority contracts with one organisation to provide everything. And that's what we've got. Birmingham have signed up with Carillion Energy Savers. Birmingham Energy Savers have signed up with Carillion, a Carillion groundwork collaboration, and Newcastle, Bristol, Manchester, big cities. They're all thinking around or have already started on that basic model. Just quickly say that there are risks involved here. Our understanding of the Birmingham model is that the idea was that this single provider would be incentivised by a whole lot of housing stock, which the council could just give them to work on, plus some cash. And my understanding is that the cash is no longer around. Birmingham has financial troubles of its own, and spending it supporting a private company is not something which would go down extremely well. So there are difficulties with this whole model. If you're a local authority which doesn't have its own housing stock, and you're a local authority which doesn't have cash swilling around, and there are none now, then what is your offer to this big single private provider? What on earth are they buying? Why are they going through £1 million procurement process if at the end of the day they could have had their vans driving up and down the streets of the city anyway? You don't need the council's permission. So there's quite an interesting challenge around this model. Why it's so popular is because of cheap money. If you can make this big, you can get cheap money from the city. This is the driving logic of it all, and this is why it's ended up like that. However, having said that, we've been working with the local authorities in our consortia, looking at different ways of doing this. Our consortia, we've got North Yorkshire local authorities, Nottinghamshire and Derbyshire local authorities, urban South Hampshire, which is Portsmouth and Southampton basically, in North Wales, and thinking through different ways of doing this. And what we've come up with are some ideas like this. The multi-partner model, so not one single provider, but actually a group of local providers that the council would work with. An assessment-led model, where the local authority, if you think about the local authority's role within this, if they're not a provider, they're clearly not an installer. Where could they intervene to have the maximum impact on sort of the ethical delivery of Green Deal, if you like? And some have come to the view that it's at the assessment stage is where they could do that. This is where the first opportunity for trust to break down happens. If you have an assessor in the house saying what you need is a brand new boiler, and then he has to state, oh, and by the way, I'm paid a commission by Worcester Bosch. What's the homeowner to think? So councils are saying, well, that's a risk, that happens. These people will be out there, but there's an alternative council model where you still have to pay for it in some shape or form, but you do at least have the comfort of knowing that it's a council assessor that's coming out and they'll give you impartial advice. There's a model which is community finance led, which is what we're working on in North Wales, and that's looking quite interesting. I'll say a little bit more about that. And then there's an alternative, if you like, to the do nothing, which is the protector model. Lots of local authorities are extremely concerned that delivery of Green Deal will turn into a disaster, and if it all starts going wrong, the public will start phoning them up and saying, why is this going on? Why have you allowed this to happen in the town? And so some are just putting together a helpline, information leaflets, etc., which are all aimed at warning the public about the risks around Green Deal. Now, of course, you can imagine that really cheers DEC up. They're trying to cheerlead a whole new programme, and then they've got local authorities going, watch out, it's dangerous, don't do it. So there needs to be an accommodation found between those two attitudes to Green Deal, but certainly the local authorities, they do want this to succeed, but they do want to protect the people, their local citizens as well. So if I just go through the Portsmouth model, which picks up on a couple of the earlier ones, the multi-partner plus the councillor assessor. They've made a couple of assumptions that the cost of assessment would be between 90 and 150, depending on whether it's a single trip out there or they're doing a whole street in a day. And they're assuming that an interest rate to customers will be 7%. It's probably going to be a bit higher than that, but not much higher. But that's the assumption that they're working on. The idea is they'll work with local providers, they'll directly employ the assessors, and they'll charge the providers for the work. This is quite interesting. This has gone down like a lead balloon in every other local authority that I've presented it to. But what they're saying is that if a homeowner decides to take up an assessment and then not go ahead, then they will get charged for it. And they need to know that beforehand. But this is linked to the local authority itself having some ambitious targets around reducing local carbon emissions. So just giving away Green Deal assessments and then going, oh, fair enough if you don't want one, that's not really delivering. So that's why they're thinking along these lines. If you could have it done, you should. They're thinking at least 4 providers, and actually there's a procurement process beginning around Portsmouth, but it's a very minimal procurement because they're not really selling much, and they've recognised this. So with the Birmingham model, it was, the council spent £1 million putting together a European Union compliant procurement process. Portsmouth are thinking, well, we could just run something like a normal framework agreement and put that out there and then see how many providers are interested in working with us. Because we're not giving them work as such, I mean, the council, there's no money changing hands from the council to the provider, then you can avoid a lot of the procurement work. It's just a partnership to deliver local Green Deal. And apparently the lawyers are happy with this so far, so we'll have to see. The London model, despite the fact I work in London, I don't really know that much about it. It's all of the London boroughs were consulted. How do you want to take this forward? A real mixed bag, some ambitious to start with, and then it waned, others not quite sure right from the very beginning. It's probably going to be some sort of role for the GLA in procurement. Single provider model is probably what they're thinking at the moment, and the local authorities will be the producers. They will produce leads if they want to, and there'll be some local authorities who won't, and if it's, say that's Southwark, they'll just borrow staff from Islington who'll go and do some marketing in Southwark, and then they'll produce the lead which will go to the GLA. This is the one that we're working on in Wales, which is the community fund model. It's a bit of serendipity, really. There just happens to be a very active community banking fund in North Wales, the Robert Owen Community Banking Fund, which for 4 or 5 years has been working with the local councils doing retrofit type activity under what you might call the old model, so directly funded. So the money is given directly to the community banking fund, and then they employ local tradesmen to actually do the work on properties which are suffering from fuel poverty. they recognise, and I think we do as well, that that core expertise they have in keeping the money local and building local supply chains is actually a really good tie-up to the local council's preoccupations around Green Deal, which are nothing to do with climate change and everything to do with green economy and fuel poverty. That's what the local authorities are concerned about, and they can see that they already have an organisation which is used to building those local supply chains. Again, they're in a sense hands off as well. They don't do the work, they just find SMEs who would do the work. You have a provider which combines with the community banking fund, so is a conduit for the cash into the community banking funds, and that fund can use as much local money as it can find, but then after that it would go via the provider to the city to get the rest, working with the local councils and building supply chains of local installers. Now we think that works, and we're trying to get a meeting with Welsh Government to get them to think that it will actually work as well. It has the advantage that most of the key delivery players, so say we were the provider, we're not for profit, they're not for profit, and they're not for profit. The bottom two clearly are. But you've got that interface with the public being a not-for-profit one and being focused on their concerns, etc. And then people who come in after that to help support the actual delivery, it's understood that they're private sector and they're there to make a profit. But the trust has been built up right from the word go. So we hope that that will progress a little bit further. It has other advantages. There's no cost to the local authority. They're just a player. You can set up your own local governance structure if you want to. This doesn't have to be a Welsh scheme or a North Wales scheme. There could be a Powys version. We can sort of chop and change it depending on what the local economy actually requires. The local authority can get involved and they can build up as much of the green growth and fuel poverty side as they want. And it can start small and grow, which is pretty important. The whole thing we've been talking about with Birmingham and the approach they've been taking is that they feel they need to go big early, and they need 15,000 properties to be done in the first year. That is potentially possible within a big city like Birmingham. It's not possible when you get outside of the big cities, and so you do need a model which is capable of organic growth rather than starting massive straight away. I think we'll skip that actually. So getting towards the end here, some of you will be aware of the Pioneer Places Fund, which local authorities are currently bidding into. This is basically DEC. They had incentive fund money to give to the public for the last quarter of this year. Because Green Deal hasn't started, they've got that money lying around, and they thought a good use of that money would be to give to local authorities to kickstart local Green Deal, and that's what this is about. So actually getting people to the position where they're ready to start a Green Deal is the key outcome that DEC are looking for, but they also want local authorities to be building local supply chains, putting up demonstration projects, and they do want some non-domestic in here. We've focused on domestic with Green Deal, but it is available for non-domestic sites as well. They're always slightly more complicated things to deliver, but again there's an opportunity, for example, for a local authority to put their own estate up as a potential Green Deal pilot, and that would be something which would be very, very useful, but very, very difficult. We've got two projects that we're currently intimately involved in. One which started in North Yorkshire, which is a 4 national parks project, so Peak District, Lakes, North York Moors and the Dales. Unique characteristics of those in terms of the planning regime that they're under. Slightly more usual characteristics in terms of solid wall, remote, off-grid type properties, where that makes up a lot of the country. And so we're hoping DEC will fund this project because it will help to spread learning about those particular types of properties in rural settings. I'm very glad I've met Russell, because I'm hoping that he'll be one of the partners in this project, because Cumbria and the Lake District have recommended parity projects as being a really interesting way of developing local supply chain that we should get involved in. At the other end of the scale, there's the urban South Hampshire project, Portsmouth and Southampton. Similar activities, go out there, market the Green Deal to people, offer them free assessments, offer them free Green Deal plans, get them to the point where they actually want to take this up at the end of March, and at the same time building local supply chain and all those sorts of things. And so that's what we're involved in. Then we know there are lots of other projects out there. I know Lincolnshire councils are putting together a project, for example, to bid into this. So there should be a fair bit of activity. The government is doing as much as it possibly can to get the public to the point where they'll start needing installers to actually put the stuff in, but they can't commit to that yet because of the uncertainty over when the Green Deal will actually be up and running. So I think that's it from my perspective. Just to say that if anyone has any further questions about local authority views of the Green Deal, then please get in touch. And also, if you are interested in learning more about the journey of becoming a Green Deal provider, I do write a blog, which I know with Nick reads, which is sort of giving you a sort of fortnightly update of the process of becoming a Green Deal provider. We'll be doing a similar journey to everyone else within this, I expect, except for British Gas and the big uns. It'll be different for them, but it'll give you a feel for what they're going through and understand their concerns. Thanks very much.